With interest rates rising, how is it affecting the housing market? Let's turn to Michael St, team leader and vice president of St. Realty, to see what the state of the market is. Good morning. Thanks for joining us, Michael.
Good morning, Bob. Thanks for having me.
So let's start off with the current interest rates and how is it affecting people buying and selling homes in Hamilton?
Yeah, so for the last number of months, since about February, the Bank of Canada has been starting to lift us out of the emergency level interest rates that we had been enjoying or experiencing since really the beginning of the pandemic. And so we've had 2 or 3 interest rate increases now since the winter months, and we are now starting to experience a bit of moderation in the housing market.
Are there markets that are hot and cold? Is it kind of uneven?
I mean, generally the market is still somewhat busy. We are in a seller's market still, although things have moderated. But what we are seeing is that certain areas, certain communities, and certain price brackets and styles and types of homes are impacted differently. So there are some areas and some types of product that are still moving up in price. There are other areas where prices have moderated a little bit, but they're, so it's a little bit of a mismatch depending on where you look. So it's very hard to look at, kind of overall averages and paint the whole market with a single brush.
Right, but would you say we're shifting towards a buyer's market in terms of inventory?
We've moved more in that direction, but we're definitely still in a seller's market. I mean, I think one thing people need to remember is that we're coming off the most extreme seller's market in history. And so what feels like a slowdown or a moderation in historical terms is still somewhat of a busy market.
Yeah. Now, the Bank of Canada is warning it could be more forceful in July with interest rate hikes. And in the big picture, there's other things the central bank is battling, like inflation. So there's some collateral damage with the real estate industry. Are you concerned about further hikes and the chill that it will put on the market?
I think we're expecting further hikes. There's no doubt that at the July meeting, rates will go up, and I don't think that they'll stop there. I think it's a good thing. It's healthy for the market. We need rates to be at normal levels so that we experience regular, normal real estate markets and environments. What we've seen over the last couple of years is not something that you would expect to continue.
Yeah, because I mean, we had that record number earlier this year where the average price of a home in Hamilton was over $1 million. So let's talk about the May report and what we saw.
Yeah, basically what we saw in May was a continuation of what we began to see in March and April, and that's that sales volume is down by double digits. So again, in comparison to the same time last year where we had never seen more homes trade hands in Canadian history, sales are down from that point. But again, in historical terms, still a fairly busy market. Prices overall have softened by maybe 3 percentage points, 4 percentage points. But again, depending on the area, I mean, some areas saw prices increase. Some areas saw prices come down slightly, overall sort of balancing down, 2 or 3 percentage points. But, a bit slower of a May than you would expect. But I think that is being driven by some of the fears out there right now because of rates that are rising.
Right, and yeah, certainly the more expensive mortgages are a concern, but you're right, we do need things to get back to normal as well because prices were pretty crazy. Anyways, we appreciate your regular input on the real estate market for Hamilton, Burlington. Michael St. from St. Realty. Good to see you.
Thank you. Have a great day.
You too.